We're getting a confluence of targets here. So everyone's going to get super bullish gold, and I'm going to actually step out and call a localized high around the 3 grand mark as we run this. Why? And will it go higher? Yes, in time, but I think other things are going to come into play that are going to potentially put a little bit of a short-term, maybe medium-term stop on markets. They don't go up in straight lines. That said, we see 6,800, 7.5 on bigger time frames. There are more technical targets.
Gold has achieved a historic milestone, surpassing $2,900 per ounce for the first time. This is driven by a weakening dollar and robust U.S. private sector employment data, showing 183,000 new jobs in January, exceeding the projected 150,000. Market analysts are increasingly confident that the precious metal could breach $3,000 later this year, with various economic and geopolitical factors supporting this upward trajectory. Renowned technical analyst FrancisHunt, known as the market sniper, has identified compelling chart patterns supporting this bullish outlook. Hunt's analysis reveals a significant bull flag pattern on weekly charts, with an immediate target of $2,897. His methodology emphasizes the importance of pattern confluence, where multiple technical indicators converge at similar price levels, strengthening the probability of reaching projected targets. The long-term outlook appears even more dramatic, with Hunt's technical analysis suggesting potential targets of $6,800 and $7,500. This projection finds validation in research from the Axie portal, which independently forecasts gold reaching $6,800 per ounce by 2040. Their analysis cites historical data patterns and anticipated increases in global demand over the coming decades as key drivers. Market observers are drawing notable parallels to the 1973 and 1974 stagflation period, during which gold prices experienced an extraordinary 8-fold increase. Based on this historical precedent, several analysts project gold could achieve the $7,500 level within a 4 to 5 year time frame. This forecast aligns with broader market sentiment regarding precious metals' continued upward momentum. Near-term projections remain robust, with market experts anticipating gold potentially exceeding $2,900 in the first quarter of 2025. The convergence of technical analysis, historical patterns, and fundamental factors suggests that the $3,000 threshold could be breached later this year. This outlook is further supported by ongoing economic uncertainties and geopolitical tensions that continue to enhance gold's appeal as a safe haven asset. Before diving deep into this video, subscribe to our channel and hit the bell icon so you never miss an update. This way, you'll stay informed about all our latest content and insights.
So I'll make a couple of interesting points that I keep making, and I really want people to recognize. But let's just first, how's gold looking? So this is an HVF setup. So this is something we specialize. It's our community, and we actually actively trade this. So we are leveraged long gold throughout what is actually turning out a crisis, but has turned very beneficial for gold. And we're expecting the 2,900 level. You'll see a target of 2,897. We also have a much bigger time frame, a bull flag. That's also here. You'll see 2 purple lines. Purple are what we use for our targets there. One is this current setup on a smaller time frame, the daily, and the other one is a much larger one on a weekly. We're getting a confluence of targets here. So everyone's going to get super bullish gold, and I'm going to actually step out and call a localized high around the 3 grand mark as we run this. Why? And will it go higher? Yes, in time, but I think other things are going to come into play that are going to potentially put a little bit of a short-term, maybe medium-term stop on markets. They don't go up in straight lines. That said, we see 6,800, 7.5 on bigger time frames. There are more technical targets. But when you reach a confluence, that's 2 patterns that give you the same level. I never ignore that fact. So we are net long. This was a little bit of a shooting star on Friday. So this is the daily time frame. And then you traded down with all the drama of the tariffs that are being spoken about. And you've shrugged it off and you've come back up to give a hammer. This just turns into a range-defining move. There's your shooting star. You were knocked back. People were expected a bit of risk off with the tariff narrative. Some of the insiders on Friday, you've got to say there must be insiders. By the way, that's at our second interim level where we expect a little bit of pullback action. So there's a pause. That goes all the way down here, which was around 2,770. And all the way back up a hammer. So what's actually happened is you've ridden the pullback and you've been rejected. The demand for gold hasn't gone away. Now, if I just highlight from the very highest point over the last 2 days to where we are now, and I'm going to make a point about Bitcoin and crypto markets as well in this. If we just go get the measuring tool, how badly are we off the most recent high? By the way, this is the most recent high against all currencies. So at its worst point in this crisis of tariffs, you sold off 1.59%. And in the same day, you're already back up. You're only 0.54% off your current all-time high, which was recently created and is across nearly every single currency that is at an all-time high. I think America's having a run on gold behind the doors. They are putting it under the catch-all of, the volatility of the tariffs, because that's also come about. And in actual fact, to stay whole in terms of those that are actually asking or calling and no longer trusting counterparties to hold gold, the British, as a special relationship, are shoring up America potentially. And that is why gold is coming in. And that gold's not being tariffed. And even though the announcement now is subsequent to that, any new gold coming is not tariff. It's not going to be treated as product and service. So I think that's a lie. It's a misnomer to hide an inconvenient narrative of a nation needing shoring up in the precious metals department. And I think when the whole thing blows up, you're going to find out that the US doesn't have the metals in their name unencumbered or unhypothecated elsewhere that they claim to have, and that the flight from metals from the west to the east is far, far beyond most of our understanding, and we're going to be in a state of shock and horror when the curtain is fully pulled back, and we're seeing the last moments of that currently in play. So I think that's a huge story that needs to be discussed more and shouldn't be parked under the tariff umbrella in the catch-all way that it is.
China's influence in the global gold market extends far beyond its borders. It has established itself as a powerhouse through multiple channels of production, importation, and acquisition. Market analyst FrancisHunt noted that China has strategically positioned itself ahead of other nations in the gold sector, employing a comprehensive approach that encompasses official channels and alternative markets, particularly in Africa. The nation's dominance in gold production is well documented. It has maintained its position as the world's largest gold producer since overtaking South Africa in 2007. According to Reuters data, China accounted for approximately 10% of global gold output in 2023. However, this substantial production still falls short of domestic demand, with the country consuming roughly triple the amount of gold it produces. The structure of China's gold mining industry reveals a sophisticated and well-organized sector, spanning 3,389 mining areas operated by around 400 companies. The industry demonstrates significant consolidation at the top, with just 13 companies controlling nearly 60% of finished gold production and 41% of mined gold output. Let's get back to the video.
I also want to forewarn that China has been ahead of most games in all these things and has been not only mining the largest miner, they've been the biggest importer, going through Hong Kong, Beijing. They've also been the biggest black market player in Africa. I've experienced this personally in Zimbabwe in subsistence mining. It goes to the Middle East, gets malted, and it gets sent there. So they have been hoarding, and they've been telling their citizens buy the gold on the basis that it's in border and there's a discount window and everybody should be exploiting it. And that's the payback for sitting in debt that is devaluing. So they need to maximize that discount border, because they are aware they can't sell their, let's say I don't know what it is exactly anymore because they've lost so much value on it, but approximately $1 trillion, let's say, either a little bit below, a little bit above, of US debt. They know they're sitting with a rotten apple in there. So they've got to stack the other basket to counterbalance that. And the discount window is it. And the good thing about the desk-based collapse, there's this beautiful DiMartini type thing of night and day. We've had a manipulated metals market, in my view, particularly silver, but also in gold. The unleashing of the loss of value in debt, as that debt market goes down, will be the freeing up and the forced price discovery mechanism in gold. Because you're going to have this 40-year fraud that ran from 18%, and they got the Saudi petro deal provided, price in oil, price in dollars, recirculate your money into bonds, creating a natural buyer. That isn't there anymore to the same degree. They've created so much debt. And there is another key point that isn't being mentioned, an absolute wall of rollovers spanning 7 trillion in this year alone, on top of the excess spending. And when we look at charts, basically the deficit spending in some instances was double the income last year, and over the 4 years of Democrats, in fact. And Yellen and others have said, we handed you a beautiful economy. It's a bit like me saying, you earn 100K, but here's a credit card, spend an extra 250 grand and show me how well you live. And you show me how well you live and you say, you see, he's having a great life. And then the next year, you now need to pay that all back. And that's come on the first year of the new president, which I think is by design. They knew there would be a pivot into the CBDCs, the digital ID, which comes in on a right-wing government. So that's me joining up my dots. I think that's what's coming, and I think he gets the reset. I've often said they like the economic crashes on the center-right candidates rather than the left-wing ones, and I think this is the beginning of some big shoes dropping right here. Is there an official policy in Europe about getting their gold percentage to GDP? And they're all looking for an absolute minimum of 4%. The Polish have spoken of 20%. So we've gone from central bankers being suppressionist and selling the Brown's bottom, which was the UK head that sold 400 tons at the $250 mark on behalf of the British people. They should all be thanking that Labour Chancellor and subsequent PM for that old trade. I bet the name on that clipboard changed, and they're doing just dandy because it's more than 10x and it's going for a target of about 2,900.
Gold production is pivotal in the global economy, with significant output spread across thousands of mining areas. The concentration of production in the hands of a few dominant players accounts for a large portion of the world's gold supply. As these key producers continue to lead the way, the growing influence of gold as a strategic asset becomes increasingly apparent, especially in the face of economic challenges and market volatility. Do you think gold will continue to rise in the coming years? Let us know in the comments below. We'd love your thoughts. If you find this video interesting, subscribe to our channel and hit the bell icon. Thanks for watching.